It feels pretty good to get a paycheck, doesn't it? Whether you have an after-school job or get your first job after graduation, there are a few really important things you'll need to know and notice about your pay: what you earn, what you get, and where it all goes. First, when you get a paycheck, it comes with a pay stub that lists exactly what you've earned and what has been taken out. If you're being paid electronically by direct deposit, then your employer will make the same kind of record available to you, in many cases online. Knowing how to read your pay stub is important. You want to make sure you've been paid properly, but also know where your money is going. First, your gross pay. This is the pay period. Check to make sure, especially if you're paid hourly, that this number correctly reflects what you should have earned over that pay period. For example, if you're making $10 an hour and you worked 15 hours over the last week, then your paycheck should have $150 as your gross pay. Great! So you've got $150 to spend, right? Not so fast. Your net pay is the amount that is actually deposited in your bank account or given to you via check that you can cash or deposit. And this number is lower than your gross pay, sometimes by a lot. Where does the money go? Two places: statutory withholding, things that have to be paid by law, and optional deductions, money you've chosen to set aside. You get what's left to spend on your needs and wants, and that's important to keep in mind as you make your own budget. The things that have to be withheld are federal income tax, usually the biggest chunk taken from your paycheck, state income tax if your state has it, Social Security, and Medicare. We'll talk about what each of these taxes pay for in a minute, but let's talk about the optional deductions first. Optional deductions might include health insurance, if your employer offers it, but requires that you pay a portion of the cost. Or you may choose to take money out of your check for retirement savings, healthcare savings, or other plans. This can actually be a really good deal for you, even beyond the benefits of long-term savings, because some of these deductions can come out of your gross pay, which lowers your income and thereby lowers the amount on which the government calculates the amount of taxes you owe. To put it more simply, your gross pay minus any pre-tax deductions is considered your taxable income. Income tax is calculated as a percent of your taxable income. So, the lower your taxable income, the less tax you'll pay. It's a good idea to see what tax-deductible deductions you qualify for to save some money on your taxes. So now, let's talk about where the taxes go. Remember that each of these taxes goes to fund your federal or state government and all of the security and services they provide. Roads, schools, public services, and other programs are funded by taxes. Social Security provides some income for many Americans over the age of 65, which you will eventually also receive, although the age minimum may change slightly. There are some jobs where you won't see any taxes taken out of your paycheck. This most commonly happens if you're working freelance or as an independent contractor, say driving for Uber or Lyft or other gig work. Be absolutely sure to check the rules in your state, because in some places, if you're babysitting or cutting lawns and making less than a few $100s a year and you're under 18, you may be tax exempt. But if you earn more than a couple $100s a year doing a job where tax is not withheld, you still have to pay taxes on that income. Instead of an employer taking your tax money and sending it directly to the government on your behalf, you'll have to cut the check to the federal and state governments yourself. There are lots of great free resources out there and on FitMoney.org to help you understand taxes, or you can seek the advice of a qualified accountant. Again, be sure to know which federal and state rules apply to you. Either way, congrats on earning a paycheck. Be smart about how you save and spend so every payday is a day to enjoy.